Hello guys, today I'll be doing a trade recap on GBPUSD. This trade was taken on the 3 minute time frame, and before we get into the charts, I would like to show a diagrammatic representation of my setup, which I always do in each of my trade recaps videos. Getting into the diagrammatic representation of my setup, in trying to look for my setup, I focus on mostly three aspects: market structure, liquidity, demand and supply. And since I'm about to, I was the trade also, guys, the trade was a buy trade, and since it was a buy trade, this is the setup for the buy. I have to identify market structure, wait for wait for a change of structure to the upside, telling me there's a possibility of a buy, wait for liquidity to be created within the market, and wait for price to come back and mitigate another demand zone which was created on a lower time frame to give us our trade, and we put our take profit where we think there's enough liquidity where price might drive onto. Now that I've done a summary of the setup, we get into the chart. Going back into the chart, guys, we clearly see that since this low was created, this was a low that broke this previous high to form this higher high. So our main focus is from this level to this level. So it started here, creating a break of structure here to the upside. Structure was broken. One, telling us there's a potential of a buy. Price came back, mitigated this demand zone, broke structure again to the upside. Broke structure into the upside, telling us there's a continuation of, there's a possibility of more buys coming in and now price broke structure to the upside, got mitigated within this 1 month supply zone and started dropping. In our expectation, we have two demand zones. This is one demand zone and this is another demand zone. So based on these two concepts, based on the two demand zones, we might try to look for a reaction within this demand zone which might give us a buy opportunity. Like if this demand zone does not hold, we might come now and wait for price to come outside the other demand zone, and we're able to see if we can get an opportunity here to look for a buy. So based on the concept, my bias on the weekly time frame is buy. So I had to, in taking this trade, I had to focus on the minute time frame, that is the 30 minute, the 50 minute, and the 5 minute. So I was just using this weekly time frame to be able to show you guys a market direction, to be able to show you guys where prices at the moment and where prices reacting, guys. So now we get into the lower time frame. That was the 30 minutes to start with. Being on the 30-minute time frame, I taught people a concept where once you look at a candlestick body like this, where the length of the candle wick is far more longer than the length of the candle body. This is what I call inefficiency in price action. Yesterday there was CPI news released, and due to the high impact of news, it caused an inefficiency in price action. When I say inefficiency in price action, I'll always repeat these concepts. It simply means the length of this candle wick is far more longer than the length of this candle wick, and that is not normal. That is what I call inefficiency in price action. Therefore, there's a probability that in the future, price might do its best to come and to fill out this week, to be able to do a price action correction to correct this inefficient price action which it has played here. So as long as price is able to cover the week to at least 50% of the week, then the price action will become balanced and efficient. So my bias was price after this candlestick form on the 30-minute time frame, price should be able to dump to fill out this candle wick. And as price was filling out this candle wick, we saw structure being created. But now I have to scale again down to the 50-minute time frame for us to see the structure. For me to continue, remember this: price was filling out this inefficient price action here, came here, started retracing up, creating a structure. It was a low which created this high, and I scaled down now to the 50-minute time frame. If we mark very well our areas of importance. Price created this low, which went this low went up. If you guys see, price came down here, created the first low. This was the first low which price created. If I scale to the 5 minute time frame, you guys will be able to see that you guys will be able to see the structure very well. But I want to stick on the 15 minute time frame. So let's have a bigger view of the setup before we scale down. So price went down, came up, and in coming up, we saw a rejection here which formed this high. This low formed this high, which broke structure to the downside, which formed this low, which broke structure to the downside, which formed this high, which broke again structure to the downside, which formed this low. If you guys see, price had been creating lower highs, lower low, lower highs, lower low, lower highs, lower low. You understand, guys? And if I zoom out the whole market, you guys will see price had been going down on the larger, on a higher time frame. Price was also bearish. So looking at all these ideas, when price came down and took this high to create this lower high, what happened? Price went up and broke structure here. Structure here was violated. This high was violated. And price, what the price from? Price it from a higher high. Price from a higher high, telling us there's a probability that we might start looking for buys and no longer sales. Yeah. And here, as price created this higher high, this was the reaction during the Asian session. And remember, guys, I always tell you guys, Asian high and Asian low are zones of liquidity. Asian highs and Asian lows are considered liquidity. And in all my trading recaps, most of them, I tell you guys, there's always a possibility that the Asian high and Asian low liquidities are taken out. So based on this my concept, most of the times if you guys look here, Asian high and Asian low liquidity was taken. Price went up, took the liquidity, went down, took the liquidity. If we go again, more here was not taken. If we go here, it was taken. So 80% of the time, there's a high probability that price will fight to take the Asian high and Asian low liquidity of the previous day. You understand? This day was created, price took it. This was created. So so that was our area of focus. So what happened? Looking at our setup, here there was a change of price action. There was a change of structure to the upside. First thing telling us that there's a possibility of buy good. What again? Second point, there was liquidity which was created in form of Asian low and Asian high. That's the second point telling us we've spotted liquidity, we've spotted market structure to the upside. Now we're waiting for this liquidity to be taken out, and then we'll try to scale in. So looking at what happened, we woke up today this morning, price started pulling down and swept this liquidity, created some structures here and continued sweeping liquidity. Then we saw a change of structure. But now I have to scale to the lower time. Presently, we're on the 15 minute time frame. For us to have a clearer picture, I have to scale now to a lower time frame for us to be seeing what's happening here, because this was the highest point at, if I have to, before I took this trade, when we woke up, there was the highest point during the Asian high, which created this low. So we have to look for smaller market structure, as you guys can see here within this area, and look for that change of structure. So going back into the 5 minute time frame, you guys can start seeing what's happening. Market was creating structure to the downside, 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 creating structure to the downside. And it was the lowest point of market structure to the downside. It was the lowest point where price went down and broke structure. This low created this high, and this high created this low. This low which was created came out and took the previous high to form a higher high. As price did from this higher high, we're expecting price to retrace down now to give us a buy, because forming a higher high is telling us there's a possibility of price to start now going up. And I had to scale again down to a 3 minute time frame to be able to spot. If I delete this chart, you guys will see this demand zone. I was able to spot this demand zone created on the 3 minute time frame, and based on that, this is where I decided to take my my trade. I remember in order to take my trade, I have to ensure that liquidity on the left hand side, or there was no liquidity in the market, all liquidity must have been taken out. Then I'm also supposed to wait to see a change of structure to the upside, telling me there's a possibility of a buy, and waiting for that retracement to come into that demand zone formed on the lower time frame. Once that is done, I enter my trade. And you guys already know my concept of ASEAN high and ASEAN low. Once the ASEAN low liquidity has been taken out, our opportunity is, what is our plan? We are expecting the ASEAN high liquidity to also be taken out. So that was exactly where I placed my take profit. It was a 1:4.1 trade, and the trade played out successful. It's really true, the trade price really went above our level, but our main focus is to target liquidity. This is a simple trade we took, guys, and it was a simple concept. So, guys, today is Friday, the 11th of October 2024. This trade was taken after the CPI release of yesterday, Thursday, the 10th of October, guys. So, this was liquidity created and swept. Thanks for watching the video, guys. Stay tuned. Try to learn my concept as simple as possible. At the end of the week, I'll do another trade analysis to show the recap of all the trades I took this week. Stay safe, stay blessed, subscribe, like, and share. Thanks.